Hey, good morning. Happy Friday, everyone. Chris von Lindenberg here from Lindenberg Financial, coming to you on February 28th, 2020, touching on the week with the coronavirus, what's happening in the markets. Today, I'm reaching out. This is about opportunity. This is not about panic. This is not about hype, but let's talk about that real quick. The news media wants us to tune in. They're spinning this politically. They're trying to cause panic. What does panic do? Think about this. Snowstorms coming, milk, eggs, toilet paper. The bigger risk here is not the virus that might wipe us out and cause human extinction. If so, we should all just, go to Vegas this weekend together. In any event, what this is about in the markets, what legitimate concern there can be is disruptions to the supply chain on products that are manufactured, and those manufacturing facilities might be closed down right now as a result of this fear. So, if there's a run on toilet paper because of a snowstorm, the virus, but there's fear that more toilet paper won't be created and manufactured, it's only going to amplify the hype. That's kind of what's happening in the markets, we think, this week. The corrections, they're normal, they should be expected, and they create opportunity. There's a number of different ways to look at this. Disruptions in supply chains create opportunities for big corporations to retool, to diversify, to rethink their business units geographically, to spread out manufacturing so that this doesn't happen again. That makes them stronger in the future. It also creates opportunity for small and medium-sized corporations to maybe get involved and increase market share of their own. It also creates opportunity for entrepreneurs to come up with new business ideas and concepts and to bring them to market that ultimately can add value and increase the value of our markets, our portfolios, corporations. So in the short term, this is causing a little bit of discomfort because if we're looking at account values, we've seen a couple things. Well, number one, we've wiped out our year-to-date return, the small amount that we've earned between January and February. And I'll remind you, January was basically flat to slightly negative. February, we were doing quite well up to about Valentine's Day, and we've wiped that out. And we've gone a little bit into last year. No big deal because last year was such a banner year. It was beyond expectation, and that's not really normal to see double-digit returns, sometimes in the 20+% range. That's not normal. This is okay. So here's the opportunity for us. The opportunity for us is that most of our clients' portfolios, number one, are managed to their time horizon and their comfort level for risk. They're tailored to you almost like a suit. That means you should stick to your strategy. You can take advantage of this in a few ways, however. If you think about it, your investment managers are able to buy more stocks at lower price points. You and I, as investors, are able to dollar cost average into the market if we're still saving. That also helps us acquire more shares at lower price points. This is tax season, a crazy busy time for everyone. Practices like ours and also tax firms, very busy. But herein lies the opportunity. We can still top off IRA accounts for last year up until about April 15th. So if you haven't maxed out your IRA and you're getting your tax refund or you've got some cash sitting in savings, make sure you get that done. Don't miss this opportunity for this correction to perhaps benefit long run from it. Additionally, if you're an annual IRA saver, you might think ahead to 2020, the year that we're in now, and rather than waiting until next spring, get it done now if there's the opportunity for your cash to get working for you. Now, I can't guarantee the market's not going to go lower. It very well could. You should still view this as an opportunity because over time, the markets continue to grow. Over time, you have the opportunity to continue saving and investing and let your actively managed portfolios rebalance, reposition, retool, purchase more of the companies they like, get rid of the companies that haven't adapted their business model, that don't have a strong outlook. This is all about opportunity. So if you have questions about your portfolio, you're welcome to reach out to us. In general, everything looks good overall. All of the different programs we use are working as they are intended. However, if your goals have changed, if your financial picture has changed, if your time horizon has changed, and you need to reach out to us, drop us an email. I'll remind you, we cannot take trading instructions through voicemail, nor can we take them through email. So you can't drop us an email and say withdraw or deposit or anything of that nature. However, we do need to connect. We're open Monday through Thursday from 9 to 5, and we're also open on Friday from 9 to 2. Trading doesn't occur typically during the day unless it's stocks. It happens at the end of the day. So it doesn't matter at beginning of day or end of day. If we connect during trading hours, perfectly fine. So I hope this message helps to reduce any concern or fear that you have. I would urge you to view this as opportunity. That's the way I personally view it for my own family and our future, and even my retired parents. This is opportunity for the long run. But if you've got questions, we're here. We're here to help. But stay the course. Look at this opportunistically and think, what can you do to even come out better than going into it?